And if you're an agent, oh man, it's so important for you to know, for us to know creative finance because we can save sellers. I've seen agents letting the sellers go to foreclosure because they don't understand Subto, they don't understand creative finance.
We have Mr. Luva here, who's a real estate investor, creative financing expert, and licensed real estate agent with eXp Realty. And over the past 5 years, he's built a $15 million portfolio comprising of more than 60 units, most of which were acquired using creative financing strategies, including Subject to and Wraps. We're going to talk a lot about that tonight. How you doing, Luva?
I'm good. Excited to be here. And actually, that was one of my big goals, to be around people like you, mentors, when I bought Ben's vision of joining the team. So I'm excited.
I'm pumped to have you, and you're always learning little tricks and nuggets from anyone and everyone at different levels in the business. So I like to have my ear to the ground, seeing what folks are doing. You've got some cool stuff going on in your business, so we're going to dig into that. But is there anything on the bio that left off?
No, I think it's good.
All right. So let's get started. How did you get started in real estate?
Well, let's go back a little bit to my origins. I'm an immigrant, so I came from Cuba 8 years ago. So I started in real estate like 5 years ago, and I always wanted. Even from Cuba, I was watching Kiyosaki's videos, how to become rich in 60 minutes. I believe we didn't have connection there, internet. So I was checking his videos through the CDs, and at that time. So when I came here, I just knew that I wanted to invest in real estate, right? If you know Kiyosaki, it's all about real estate, doors, wealth, cash flow. So my first deal was a fourplex on the MLS using my FHA. You know, these days it's very common that you see all the TikToks videos. Wes Foster, our influencer in the team, all his videos.
Former guest on the show.
Yes, that you can buy a fourplex using your FHA. So I did that thanks to a person who helped me.
That's amazing. So I want to get this straight. There's a lot of folks out there that are saying, like, I can't get into real estate. It's too expensive. I don't have enough time. I don't have enough money. I don't know how. But you're over there living in Cuba and learning about investing, finally make it your way over here, and now you've got a pretty sizable portfolio. There's no excuses.
Yeah. And that's one of I want to be an inspiration for migrants all over the country, but also for people who born here. Like, hey, this little Cubanito, this little Cuban came to the States like 8 years ago, and he's doing it. He's taking action. So I want to be an inspiration for that too.
You're definitely an inspiration, not just for immigrants, but for all the locals. All right. So you got started, and you did that fourplex. Tell me a little bit about that fourplex. Like, well, what did that look like? You found it on MLS, you said, right?
Yeah, MLS. Again, a guy told me that, hey, you can buy a fourplex. I was looking to buy my first property. You can buy a fourplex with your FHA and rent the 3 units, live in 1 unit for a while, and then keep buying.
So like house hacking.
Yes, house hacking basically, and was pretty like simple. I had a W-2. I'm a former software engineer. I've been full-time investor for 2 years and a half now. So it was pretty simple. Using that, actually, I did kind of creative finance with a down payment. I remember that I had to put $14,000 on closing costs, and I didn't have all the money, so I took my credit cards, American Express, and I cashed some of the money out, and I paid the down payment for it. I learned a lot of lessons with that because, again, if you're reading from the books, you don't have like real mentors like we have here. You just want to go and you become, or you try to copy those big guys that are on the books, right? So I hired a property management right away, and I was losing money like every month just in my deal. And I learned that I need to, in order for me to delegate, I need to at least know a little bit. I got that from another mentor. You have to learn. I had to learn how to manage the properties to then hire someone.
Yeah, get your hands dirty a little bit to know how to manage them, which you're right. When you're reading the books, they're pretty high level, and they're usually on a different level. And a lot of them, when you're reading them, they're not necessarily going back to that frame of mind and that position they were when they got started. Because most of them got started getting their hands dirty, not going all in, hiring all the A-list professionals to do all the stuff like they do now. So you've now learned that lesson, like, hey, you got this property management They're cool. I'm losing money. Like, what'd you end up doing after that?
And I learned my lesson, and I self manage. I started self manage the property. I was of course saving a lot of money there, and then improving the rents. I mean the properties and raising the rents. I learned how to do Section 8s after that. All type of even these days a little is popular, like the co-living with pad split platform. But even back in the day, I was renting by the room to one of the units. Okay. So I had to learn a lot of strategies.
Yeah.
By necessity.
And was that mainly how you got started buying just rental properties?
No, actually, after that I bought another one, a single family home with a detached garage, and the master bedroom was like in a separate part of the house. And again, I remember Kiyosaki and Grant Cardone, like doors. Okay, how can I be a multifamily investor, but I cannot buy a multifamily yet. So I was, okay, I have to buy a residential and make it multifamily. So my second property, I bought it also on the MLS with my conventional loan using my W-2. At that time, my W-2 was that's my strength, right? When you have a good W-2.
Yeah, banks love jobs.
Yeah, they love the W-2. So I bought a property with a detached garage, the main room like separated, and I converted it into a triplex. Another version of house hacking. HOAs don't like that, so don't do that when on a property.
And you learned that after the fact?
Yes.
Yeah. Okay.
I know, with another property.
Okay.
So that was my second property on the MLS. I did house hacking. I converted it into a triplex, and I was living in the middle house, 3 bedrooms, 2 bathrooms, and I was renting the main room as a studio apartment and the garage apartment. I was living for free, literally for free, 3 years.
Were you married at this time?
Yes.
Wife to school?
She came with me. She came with me from Cuba. She was like, or I'm going with you, or this is done. She was smart enough to know that.
I don't know if Jamie would have gone with that. I don't know how I would have sold that. So how did you go from doing that? So that's definitely very creative from the operation standpoint. How did you learn about creative from the financing standpoint, creative financing?
I think it was through necessity. After those 2 properties, I started learning about off-market deals. Because again, on the books, it was like, you read all those guys, you buy a property, you add value, and then you refinance. But I was buying retail, a 4-plex, then the other property. Where can I add value on those properties? You can't. So you have to buy off-market deals. So I learned through another mentor. And that's a thing that I learned through in my story. Like every stage of my life, in my career, has a phase. It's always because a mentor that teach me something. So this guy is a hard money lender, and he told me everything about off-market deals. So I learned how to buy off-market deals, and I was buying the bird strategies, like buying cash. Even I paid $14,000 to a wholesaler to teach me how to wholesale, not to be a wholesaler, but to learn how to get my own properties. I got like only 2 properties out of that. But again, after I bought like 10 units, 10 properties, cash, the bird strategy, the classic bird strategy, and I would refinance those. I was getting really bad deals on the refinance because you guys know that you can have only 10 conventional loans under your name or your company, only 10. So after that, after I got my 10th property, I was getting non-conventional loans. And I was getting super bad deals. And I was like, okay, how can I buy properties, online? How can I buy properties with none of my credit and no cash? And all these like credit finance with Pace Morby and all the other guys came into my life.
I remember asking that question early on to someone I call him my unofficial mentor. And what he told me was, you cannot run your business off of conventional loans. Because like you said, you're capped. So you need to find a way that's sustainable to operate your business and finance it and finance deals. And so you found creative financing as a way to do that. And I don't know, remember this deal right here? Can you see that on the screen?
Yes, Geneva Fields.
Yeah. How'd you find this deal? And this is in the Houston area, right?
Yeah, Cypress.
Yeah. Okay.
So remember, after fight those guys, I went like full ahead into like taking action. Even from all the courses that I bought, all the communities, I watched like 2 videos. What I did was this. I went to all the networking events. I went to like the property showings, like connecting with the people. Remember, always a who in my life who helped me to get to the next level. So I learned all the innovations, Subtos by doing it, partnering with people. So I do a lot of in my marketing. One of my marketing strategies is like go direct to agents and go direct to wholesalers. I call it direct to relationships, right? Not direct to seller because you can do only, I would say one deal with a seller. Perhaps if the seller has more, you can do multiple deals. But with agents and wholesalers, you can do multiple deals, right? If you add value to them, if you present yourself as an asset. So I go add value to them. I teach them how to underwrite. That's another thing. You have to know your numbers on credit finance, on cash, everywhere. So that deal came from a wholesaler that I helped him underwrite the deal because it was a cash deal, but the seller didn't want to take that offer. So I went and offered them a Subto. So we took over the loan and we gave him more money than a cash offer will give him. But we gave him more money because we pay him $50K at the closing table and then $110K at the selling of this property. And that's the beauty of credit finance. You can find ways to structure deals without using banks, without using hard money lenders, and give more money to the sellers. So it's a total win-win-win for everyone.
Yeah, so this was a wholesaler that you're like, hey, deals that you can't do, if it meets this criteria, call me.
Yep.
Now, did you get them to negotiate it, or that's when you stepped in to talk with the seller and negotiate it?
I like to teach them how to negotiate.
Okay, so
because I want to do it, add value to them, even without the expectations of getting the deal.
Yeah.
I want to add value to you, but guess what? If you do something good,
you're going to be the go-to.
Yes, that is correct.
Yeah, and I like the strategy. So it's you mentioned going for wholesalers, going for agents, because they're a one-to-many strategy.
Yep.
You got one-to-one, that's you versus seller, or maybe not versus, but you and seller. Now, you got one-to-many, which basically what you're doing is you're going to lead getters. So it's you and lead, or you go to lead getters and let them go to the lead directly, and then they just go to you. So it's definitely a way to get a little bit more broad access quickly. It seems like you tapped into that pretty well.
Yeah, I love a quote from John Maxwell that says, every time you're networking, it's like, who do you know that I should know? It's like the first question they ask. It's like, okay, I already know you, but who should I know on your network?
There's I was listening to a podcast recently, and they were hiring a tech engineer. They were building some tech platform or software, and he knew nothing about software whatsoever. So he went to interview, put up some ads, started getting some software engineers, and during the interview, he would ask, who's the smartest person you know that does exactly what you do? And he did that, I think it was over 200 times.
Wow.
And it got to the point to where now they're going in circles because they're all kind of naming the same. Now he knew the core people who these folks are clearly the brightest at what they do. Now you're where you can start making some smart decisions as opposed to going in blind.
Mm-hmm. Yep.
So what was your exit strategy? You bought the deal Subto. That's what it looks like. I don't know. That's your listing, right?
Yes.
Yeah. So what's your exit strategy on that?
Just a flip because it's a property ARB is $490. Just a flip because I like to. Right now I'm only holding small multifamilies or small houses that I can do house hacking, or I can do co-living, renting by the room.
Okay. So an on-market flip, or did you own or finance it too, or?
No, I have the owner finance strategy in the back end. That's another exit strategy that you guys are going to see it on the next example. But I'm going to flip it for a regular flip, or I'm going to sell it owner finance, both options. If I remember, I took the house up to $180,000 loan. I gave the seller 50 and 110, so it was it's 160 in total. I'm putting $20,000, so that's how much? 180 plus 110 plus 20, we're all in 310. Plus closing costs, plus wholesaling fee, minus selling costs, we're gonna be netting $80,000 to $90,000.
Not bad.
Yeah, and the beauty is that I've leveraged everyone's money. I use the lender, the mortgage, as a leverage. I use the seller on the seller finance side as a leverage. So I only put $90,000 out of my own pocket. The 50 plus wholesale fee to the wholesaler, and the rehab. So it's going to be 100% cash on cash.
And was that what you paid the wholesaler and for the rehab? Did that come from like just cash that you had built up from other
Cash.
deals?
And then I'm going also creative, not creative, I raised capital for it. That's a skill that if you master underwriting, of course, cash and credit finance and raising capital, I would say that those two skills are kind of the base to scale a real estate operation.
Yeah, 100%.
Like a solo real estate operation.
What was it, like a private money loan?
Yeah,
or-
private money.
Yeah, love
I,
it.
I like to bring in as a partners. So the guy is like, hey, come here, do this deal with me, and you will get a percentage, like 20, 30% of the profits.
Yeah. And for anyone like, especially in this market, if you're selling a home, highly recommend offer owner's finance just as an option. Now, if you know how to structure owner's finance deals, and you're okay with holding that, the ability to hold that. A lot of that does depend on how your financing structure is, unless it's cash, unless you own it outright, then fine. If not, you can talk with our friends back there, raising their hand, TL Global, and they can show you how anyone can do it, regardless of how you have it financed. And to you, it's basically just cash. So nice little plug for you, Richard.
And that's a strategy that I'm using here. If someone comes with the owner finance, I got a lead that wants the house owner finance, I can go to an investor, I can refinance it myself, or I can go to their company to refinance it and then sell it owner finance.
Yeah, I was pretty close to selling one owner finance in Sugarland, and I was actually hoping. Usually I like cash, but I was actually hoping this one would be. It would go through because we had two owners finance interests, and one of them they were going to put like $45,000 down, another one like $40,000 down. I'm like, that's not bad. I'll take that check.
If you do the math, if your refinance is 80% from a DSCR loan, right? 80% of the property you have to put 20% or leave 20% equity on the property. If your buyer can put the 20% down, it's like 100% flip. You just flip the property, and still you're gonna make a little bit of money.
And you get sometimes get a premium on it too.
Yep.
Yeah. So you got this deal here too. Another creative financing. Yeah. All right.
Yeah, that's a
How'd you
good
get
one
this
because first, because I saved one of my friends, investor friends, that he was stuck with that deal. It's a flip in Katy. I know now why, because the property has only one bathroom. So never, ever sell a property with only one bathroom. Three bedrooms, one bathroom.
That's a hard reject for my deals. Like no three.
Yes. So basically, he was struggling to sell the property, even in Katy, because, again, the bathroom, he was struggling. He needed to get his money out, and he was selling it at 70%. Hey, bro, give me 70%, like a cash deal. And I told him, no, I will give you more. I will give you 80% of your money, but wait for me until I bring my DSCR lender. The property ARB is 250, and he wanted like 190. Hey, give him 190. I'm in a hurry. So I offered him 205, but he waited for my DSCR lender to refinance the property. Refinance it. He sold it to me, all right? And he gave me my $50,000 back. So basically, the DSCR lender gave him the 80%, $200K, but also I pay with that money the closing costs. It was like $12,000. So he got only like 180 something. And I told him, wait for me another 2 months, and I'm gonna sell the property owner finance. I sold it in a month and a half, and I'm gonna get a down payment. We got $35,000, and from that payment, I will pay you the rest. The money that I owe was like $17,000, and I will keep the cash and keep the cash flow.
So you bought it 100% financing, creative financing, 100% seller's financing, refinanced, which got him out of most of his position. And then with owner's financing, you took out the rest of his equity.
Yes.
That was basically an IOU.
So that's correct. I mean, again, he trusts me on that. You cannot do that like every day and with everyone in the market.
That's a good sell.
Yes. And he trusts me on that. But again, I love that deal because I saved a friend from a potential foreclosure by the Harmony lender. And I made money literally putting zero money out of pocket. Again, that purchase creative strategy was we call it Morby method. So it's like basically bringing the DSCR lender to pay for that 80%. That has to be also an agreement because you have to put the 20% also at the closing. The seller needs to give you that 20% back, right? There are multiple ways to do it with the lender's agreement, but basically you can bring your DSCR lender to purchase a property at 80%.
And this is your non-conventional.
Yeah,
right?
non-conventional. DSCR loan, they only care for the property to pay for itself. With the DSCR,
Just straight up rate
ratio.
and term loans, no cash out.
Yeah.
Yeah.
And even in my career, I haven't got the credit to buy a deal like that. But in those cases, I brought a credit partner. You can find money partners, you can find private money lenders, you can find credit partners. Right now, because I have so many deals in the pipeline and my credit is below 700, I'm working on that to have it. Now that I'm going to.
That's right. I saw where Warren Buffett's credit score was in the like 680s or something. So like he's a billionaire. He's okay.
But now I'm working on that because I'm going to bigger multifamilies, and you know that is important for the banks. But basically, one of my deals, I had the money, I had the PMLs, I had the deal, and I had to bring a credit partner because the hard money lender tapped me, I think $5 million or something like that, and I was way above that. And I had to bring another person just to be in the deal as a credit partner, and I gave him 10%.
Yeah. So with large multifamily, your personal credit actually matters less. It's the asset. What matters more is your balance sheet. So what a lot of, especially large multifamily family investors will do, they bring credit partners in as well. They call them KPs, or key principals. And they're the ones that, so if you're getting a loan on a property, it's $5 million, property's worth $8 million, you got $3 million in equity, then that $5 million that you're going to need to bring one or more key principals or KPs in that have a balance sheet that can show, hey, we got $5 million liquid. So as long as you have that. But yeah.
I'm a total newbie on that, like 100% newbie on multifamily.
Don't worry. I mean, take care of your credit. It's not going to stop you from getting getting a loan on a multifamily property. There's other things you'll have to solve there. So on this one, you sold it back in owner's finance, and so you still own the note.
Yes.
You still own the note. You're just basically collecting a check every single month, ACH. Do you have that serviced? Do you use a loan servicer?
Yes. It's very important when you do wraps, when you have a loan in place. In this case, my DSCR kind of loan mortgage, and I sold it again. Wraps are like owner finance when you have a mortgage, underlying mortgage. So it's important because the buyer gets a statement, an official statement from the company, and also you are kind of out of you are not worried about when the guy is going to pay. Again, wrap buyers, they're like VIP tenants. They still get late in payments. They don't pay on time, or they don't pay at all. So you have to always, they call it note maintenance. You have to be watching those notes if you have a lot.
Do you charge that fee back to them, or is that?
Yeah, it's only like $25. The servicing company.
Yeah, and you just charge that as a extra fee.
Yeah. Mm-hmm.
Okay. So how many deals or opportunities like this are you doing a month?
Between
just rough ballpark, because I'm sure some months it's hot.
Between 5 and 10.
5 to 10.
Depending, because I don't hold them all. Sometimes I wholesale the Subto. Actually, we're building in our community, our investment agents community, with the Wolfpack. We have a team that we're carrying a team with agents that we're bringing buyers that they need to add property to their portfolio, and they're looking for Subtos like crazy. So we're buying the Subtos and then selling the Subtos to them, basically like wholesaling Subtos.
Yeah. There was a guy in our team. He wholesaled a Subto deal. I want to say it was like 3.25, 3.5%, somewhere in that range. That was the loan, and he gave me a call and was like, "Yeah, I'm thinking about buying it. May wholesale it." Blah blah blah. He ended up wholesaling $35,000. Like they closed in like a couple weeks. $35,000 wholesaling a Subto deal. He didn't have to do anything else. That's not bad. And then got a call on another one that this one was 3.25%, but they ended up just going the listing route, and it's assumable. So there is a lot of folks, like, if mortgage rates today is your issue, Subto deals, like especially deals that were underwritten and the loan was issued sometime between 2018 and early 2022, those are really good deals, and it solves that problem. You just got to solve the other problems and make sure it's still a good deal. But yeah.
And if you're an agent, oh man, it's so important for you to know, for us to know creative finance, because we can save sellers. I've seen agents letting the sellers go to foreclosure because they don't understand Subto, they don't understand creative finance.
That was
And they-
so the house we moved in, the house we just bought, 2.26% interest. It was about to go to foreclosure. It was about to go to foreclosure because I felt bad for the other agent in some ways, because they were a brand new agent and this was their first listing. Like, what a doozy. And they had no idea what was going on. And then I'm like bringing all this stuff. Like, who are the real estate agents in the room? Raise your hand. All right. So you can probably think back to your first listing. It's a little crazy. A lot of stuff going on. A lot of paperwork. Imagine if you realize last minute, like in this market, in this economy, and then you realize your client's in pre-foreclosure. You didn't know that. It's going to happen in a couple weeks. And then you got this investor on the other end talking on all these crazy things like Subto and assignments and that's what it was. And it was that close. It was like down to the hour that we saved that thing. It was crazy.
Wow. We have saved sellers at 9 a.m. in the date of auction. You know, the auction is start I think at 10 a.m. We have saved them at 9:30, for example. We go to that last option. It's like going to the foreclosure, like how do you call the court?
Yeah.
Oh, to file bankruptcy. You fill out the paperwork and then send a picture to the trustee, and they can call the auction and cancel that. And they can move forward with it, bankruptcy or not. But at least you buy them like a month and a half.
Yeah. A
Extra.
TRO works as well, but you really need that done by the Friday before.
Yes.
In
And so
Texas.
it costs like $2,000 or
So yeah, around there. Yeah, I've only done that once, and that's because we couldn't get the check in time to the trustee, and so we filed the TRO. Then I brought the check to auction, and yeah.
Got it. And again, if you're an agent, you need to learn those opportunities. We have a guy in our team, Santiago. Actually, he's on vacation on Spain for a month, and we have 2 deals on the contract ready to close in a week. Because
So you sourcing deals from Spain?
yeah, like literally he's making money and drinking beer from Spain.
Yeah.
2 deals. One a Subto flip, similar to the first one, that he has an investor from Mexico. He wants to do like a flip. And again, the beauty of the Subto flips is that you leverage the mortgage and you don't have to go for a hard money lender, right? So the guy has only like $60K, so 30 the down payment plus 30K rehab, and boom, you can flip that baby. And the other one is like a regular wholesale, a Subto that he has clients that they're lawyers and they want to have properties in the portfolio. They're building the portfolio and they prefer credit finance.
Are you doing any direct marketing for these outside of just networking?
No, it's like networking. People, again, if you do that like for a long time, like networking with people, adding value to people, expecting nothing, you will get back.
Yeah. So your marketing costs on these are zero.
Zero,
I mean,
yeah.
it's time, but yeah.
I'm telling everyone that my method is kind of slower because it is like years in the market. I mean, not that many years, but at least 2-3 years to get that momentum to people know your name. And again, do the right things, do what you say you're going to do, perform, always close. And important, paying everyone the most you can. You know, some investors, sometimes we're like that. Oh, let me negotiate this deal down a little bit for the wholesaler. Hey, you're making 20K. Let me just make 10K. No, I try to pay everyone the most I can. To get a good deal. So they all go back to me. Hey, that Uber guy, he pays. So let's go.
Yeah. So you were taking slow and fast and that process. Like, is there who here in 5 years wouldn't mind an extra $60 million in real estate assets? Yeah, like it's not bad. So, how many opportunities do you think there are out there? Like, I mean, you worked with all of these wholesalers. You've talked with agents. You're an agent as well. How many opportunities do you think they die? They die because they're only trying to use the one trick pony that they know, and that's as his cash offer. They don't know how to structure these type of opportunities.
Hundreds a day, or let's say thousands a month, like literally. Because of the lack of, not the lack of knowledge, because people need to be more prepared. Agents, investors, wholesalers, they have only one, it's like only one tool in the tool belt. And they're losing a ton of money in that.
And they're doing a disservice to the people they're talking to. So, it's just critical to your bottom line, but also if you're really trying to help folks to understand these other strategies, especially in this market, you have to be a little bit more creative to get deals to work. So, where should where are you looking? Where should people go if they want to learn more about like different creative financing strategies?
You can learn the basics like everywhere, YouTube, but I will say learning creative finance is learning how to underwrite this type of deals, to have that formula in your head, to have the different exit strategies. Going and I will say practice. It's about practice, right? And we have an in-person event when?
Yeah, June 20th. Yeah.
Okay.
I'll share that in just a moment. Yeah, we got to go.
So going to those events, like in-person events, work with people who knows about credit finance. Of course, watch videos, but take action on the deals. Try to underwrite the most amount of deals you can, and move from there. Take action, imperfect action.
It's funny how action works. All right, so ask these 4 questions to the same 4 questions to every guest that comes on. If you could give advice to your 20-year-old self, what would that be?
Oh my goodness, 20 years self, I was in Cuba partying. I don't know, like have less fear of making big decisions or acting or going big, something like that.
What book or books have greatly influenced your life?
First, I've read a lot of books in the past like couple of years. First, of course, the Bible. I'm a Christian. And then How to Win Friends and Influence People. That's kind of my second book. And again, if you see my story, it's everything based on relationships. Everything. How I leverage the sellers, how I leverage the private money lenders, how I leverage the team. It's leveraging by adding value. It's not like taking. It's like by adding value. And again, I'm doing like 13. Actually, we put another property on the contract today. 13 to 15 projects, active projects at the same time under rehab. I do a lot of cash deals too. So the only way that I'm doing that is because I partner, I trust people, and people trust me. Develop your relationships or your relationship skills, I would say.
In the last 5 years, what new belief, behavior, or habit has most improved your life?
That's a good question. Going getting into places like this, places like you know that you're going to grow, that you're feeling comfortable, like the mastermind that I just in with the Pace Morby and Jamil Dandy and other guys, the Owners Club, going into this group in places like talking to you, multifamily, and you told me no, that's not that way. It's like, oh, okay, I know nothing about it. Going into those places where you feel uncomfortable, there's where you're going to learn. And I'm becoming good at that. Feel uncomfortable.
Be the dumbest person in the room.
Yes, I like that. I got the other day, sorry about that. I went the other day to a meetup on the mastermind, and I talked to a guy and asked him, hey, how can I create a fund or something like that? And he gave me a full explanation, the 3 to 5 type of funds. And I was like, okay, yeah. Like taking notes. I was getting nothing out of that, like literally. But being in those places, it will make you grow for sure.
100%. How can people reach out to you?
I'm pretty active in social media and Instagram, Facebook, and now I'm getting into YouTube. You can find me there. I have kind of a unique name, Liuver.Zanuro. That's my Instagram handle, so reach out to me there. And I love, again, in my story, every new stage in my story has a face attached, right? At the beginning, the guy who told me how to buy the FHA, then my Harmony lender, then the credit finance guy, Space Morby, Ben with you in the team. So it's always a face. So reach out to me if you need help. I want to be the face on your new stage, for sure.
Love it. All right. Let's get some questions from the audience.
When you do owner financing, do you use a third party to collect the payments, or do you do it yourself?
I mean, you can do it. You can do it yourself, but if you're gonna do it professionally, it's better to have a servicing company. That's how they call a third party. Yeah.
And how do you find a good servicing company?
There are plenty out there. It's like anything, like asking for referrals. There are a lot of good ones, but a lot of bad ones. Yeah, I can refer you to a couple of those.
That would be great. Thank you.
It's very important because, again, you have to, for the buyer and for you, have those records that, hey, this guy paid this. Sometimes they pay extra, so you know that extra money goes to the principal. So that they will handle that.
Yeah. All right. Who's next?
So, if you were to borrow from friends and family, what would be the expectations that you would do? Like, hey, this is the return that you would give. If it's like one of your close cousins or your close friends, like what expectations would you set in terms of borrowing that money?
In terms of returns or protection?
For them. So much for them, because it has to make sense for your friends and family to lend you that money, right?
So what rate, terms,
something like
all
that.
this stuff? What deal are you giving to your equity partners or lenders?
Okay, so that's raising capital. That's a raise. Yeah.
I'm just guessing it's going to be slightly better for your friends and family than...
I will say yes. I made that mistake because at the beginning, your inner circle is going to be your first like private money lenders, because they are the ones who trust. They're the ones who trust in you, right? So, for example, in my own story, to my friends and family that I borrow money from, I'm paying them 15%. Actually, I'm paying back the last one tomorrow. 15% annualized. That's for me now. Yeah, 15%. Now for me, it's like that's a lot, because as I became better and better in raising capital, I'm getting even guys at 10% annualized. IRA guys that they had money sitting in their accounts doing nothing. So I offered them 10% and they said yes. But raising capital is about asking questions, right? It's like, okay, how much money do you expect to make in real estate? People with money, they care about two things only. With money that they want to invest in real estate, they care about how much money are they going to get back and how are they going to be protected. So those two. Ask questions. You never know. Perhaps you're going to give them 15 and they tell you, hey, I'm okay with 8. And they would, damn it, I'm paying.
Yeah, well, 100% on that. I was offered 2% once. I really wanted. Jamie wouldn't let me do it. I ended up paying him 5.
Analyze?
Yeah. But sometimes for some folks, your inner circle are the ones that will never lend to you. And here's why.
And it's dangerous. It's dangerous.
Well, yeah, I mean, you may not want to borrow from them either, because Thanksgiving dinners and such, but they're the ones that they know everything about you. They know the stuff you did when you got in trouble when you were 13. They know the crazy nights you had when you're in your 20s. They know all that stuff, and now you're doing this real estate thing. You may have to prove it out over time before they'll invest, and that's okay. So hard money lenders, they're always available. Now, they're not going to do creative stuff with you. But your private money lenders, you can entice them if you have a solid game plan and you can show trust first, because they actually, more than the interest rate, they care about their principal. Am I going to get that back? And then, yeah, well, they want to make a little something. So
I'm getting those good rates even on second lien position loans, because I have strategy now. Remember, I'm doing a lot of deals, like active deals, with a combination of pure cash, bringing private money partners that we go by percentage on the deals, or I go with a hard money lender and then bring a private money lender on the second lien position to fill that gap. So I'm 100% finance. Again, second lien position lenders, they take more risk, right? But because it's such a good reputation, I only care about my reputation because my business is about referrals, right? People coming to me. So even if I have to, if I lose money, I will lose money myself, but not my lenders. And because the portfolio that's why it's important to build a portfolio, to have equity in your portfolio. Out of the $15 million, my equity is close to $6 million between me and my partners. I have a bunch of deals with partners. So having that is like a safety net for the lenders. Hey, real estate is kind of crazy. If I lose money in this deal, I can sell my house. I can sell these rentals. So you're covered.
Love it. All right, who's next? Got one over here.
So, Louver, you were telling the story, or you were giving the example of, I'm not sure if it was your second or third deal, where you got it under owner finance. You offered him to take over his DSCR or do a DSCR. Essentially, you were basically offering him the 20% that you needed to purchase from him, and then he was giving it back to you.
Yes.
You were okay.
Mm-hmm.
So I'd like you to kind of expand on that based off of something that was offered to me. I got offered 6 duplexes, all worth about $400,000. And the way they offered it to me was I could have them for $320, but I'd have to write the full offer for $400,000. I'd get $80,000 back after the close. And for me, it was a great deal. If I could have found a way to structure it correctly, I probably would have taken it because it was 6 duplexes I could have done.
Are those
that
the
with.
white ones in the 77029 or?
Yeah, obviously you and I both know the seller. So and they took them off the market unless you bought them. I don't know. So,
No. That was not a deal.
But originally I didn't do it because I didn't know how to structure it correctly, and I didn't want my lenders to get kind of fishy because I was buying it with DSCR lenders. So could you expand on how you did it, and is that something similar to what I'm just describing to you?
Yes.
Okay, perfect.
In that case, remember, it's about relationship in those deals because the DSCR or any lender, they lend money to you based on your ability to put the percentage, to put the 3%, to put the 5%, the 10 or the 20. So that needs to be done in a way, if you have the money, perfect, then you have an agreement with the seller that they can pay you back through a service, through invoices, through another lien, or you get a transactional lender who brings all that money, and they have ways. There are transactional lenders who can bring that 20%. They're charged like 1.5, and they have structures when they go on JV with you or with the seller. I don't have the details, but I know that they do it in a way, and they explain that to the lender, and they say 100% of the time yes, because that's what they do. They bring the 20% at closing, and then they get it back through the title company. That money never hits sellers or your account.
Is that how you did it? How did you do yours?
No, because mine, the 20%, it was like $50,000. So I had that from my partner. So we put the $50,000 and we got money back from the guy.
On a handshake?
Yeah. He was my friend. But the way you do that with people that you don't know is bringing those lenders. Even if you have the money, it's good to leverage those transactional lenders because they have all the infrastructure to do those deals. Even they have the TCs that they do all the paperwork. Even it's a joint account. Yeah, it's kind of complicated. But they have their own thing. So you just trust them and pay them 1.5%.